what you want to see. I know we have a few new people from the last time I ran one of these, so I thought maybe take it back to the basics or do something that would allow our newer members to kind of pick up on some of the trading stuff that we've been doing. So having said that, let me know in the chat if this is your first time attending a Champions University call. Let me know in the chat if it's your first time. No one? No one. Okay, good. Okay, first time. We got one first time. Carlos. Okay. Perfect. Awesome. So having said that, we'll be kind of talking about some of the basics about a style of trading called binary options. Binary options is the market that I personally love trading in. It is my favorite market to trade in, as some of you guys may know. But I thought I'd share some of that knowledge to you guys today, so you guys can start trading on your own. There's a lot of stuff out there. There is Forex, there's binary, there's crypto. The focus for today would be the binary options market, which is one of the markets that are out there. But having said that, I'll share my screen and we'll get started. So when it comes to binary options, it is, in my opinion, one of the most simple styles of trading. The reason it's simple because it is literally binary by the name, which means you only have two options, right? You can either buy or you can either sell. Now, what are you buying or selling? It can be pretty much anything. It can be a currency exchange pair, such as the US dollar against the Canadian dollar, or it could be gold, for example, silver, or it can be a commodity such as oil. Now, binary options does allow you to trade all of these things at one platform, but I personally trade only currency pairs, and the analysis that I do are on currency pairs itself. So today we'll be covering how to analyze the market within binary options and how we can use these analysis, these trend analysis and zones on the charts to take advantage of this market and make some money for ourselves. So having said that, we'll be talking about trends, right? What is a trend? How do we use a trend? We'll be talking about support and resistance zones that would help us identify areas to enter for trades. And then we'll take a look at a couple charts to see how we can combine these two basic topics to take trades within the binary options market. Now, when it comes to trends, this is very simple. There are only two trends or two main trends within pretty much any market, whether that's the Forex market or the crypto market or the binary options market. Now, when I say binary options, it is technically considered a subset of the Forex market. For those of you who have heard about the foreign exchange market, it is pretty much the exchanges of currencies across the world. So binary options, being a subset of it, does involve trading of currency exchanges as well. The main part to this is that, again, you only have two options. You can either buy or sell. And it is a timed form of trading where you can enter for anywhere between 1 to 5 minutes or anywhere even longer than that. But you have a limited time within the market, and then you either win or lose the trade. Now, when it comes to looking at trends to even enter the market, we have a uptrend and a downtrend. So if you guys look at the graph on the left-hand side here, we can see three blocks of bars, right? You can call this a bar graph. And you can see as we move towards the right-hand side, the bar graphs, the bars itself within the bar graph increase in size. So we can see this is showing some sort of an upward trend or an upward direction, right? That's the simplest way to understand an uptrend. It is just the upward movement of pretty much anything, right? In our case, we'll be talking about the exchange rate within currency pairs. But for example, we can consider these as the gas prices, right? Within the last 3 years, as we can see, there is an uptrend for each bar that has been represented. Now, the same thing applies in the opposite direction. We have the first bar being the highest, then going down, and then going even further down, indicating a downtrend. So this principle pretty much applies almost exactly in the binary options market and the Forex market, and pretty much any other markets is the crypto market that is out there. So as we said, when the price moves in a certain direction, either higher or lower over a specific period of time, that can indicate either an uptrend or a downtrend. And then the time period can be pretty much anything, right? Each of these bars can represent 5 minutes. They can represent 15 minutes, 30 minutes, an hour, a year, a day, could be pretty much anything. But within the binary options market, we tend to look at shorter term intervals, such as anywhere between 1 to 15 minutes, particularly 5 minutes and 15 minutes. And we look at how these trends are formed within those period of time. So once again, how to identify an uptrend? We can see that in an uptrend, we have higher highs and higher lows. So what I mean by that is every single red line that you see at the bottom of these candles, which is what we call them, those are our lows. So that's a low, that's a low, that's a low, that's a low, and that's a low. And then the greens are our highs. That's a high, that's a high, that's a high, that's a high, and that's a high. Now, what happens in an uptrend is we see a series of higher highs, right? So we went from here to here, which is higher, and so on. And we also see higher lows. So our low points also go in the upward direction. So we're pretty much climbing a staircase, for example, right? So we're just going up, 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 and that is indicating an uptrend. Now, when it comes to a downtrend, exactly the same, except the opposite. We have lower highs and lower lows. You can think of this as going down a staircase, right? We're going from here to a lower high, lower high, lower high, lower low, lower low, lower low, and so on. And we can see the direction that is forming is a downward or a downtrend. And in this case, it is an upward direction or an uptrend. So we like to say the trend is your friend, and that applies when trading under many different circumstances, not always, but within binary options, I like to trade with the trend. What that means is if we are on a downtrend, we want to look for sells. And if we are on an uptrend, we want to look for buys, right? So to go back to this, if we are going down, let's say we are able to identify that, hey, on our next high, we're expecting the price to go down. We're going to enter for a sell here, and the price is going to go down. And the reason being is because we are in a downtrend, and our next high is actually going to be lower than the previous high. So let me just turn off my Telegram. Okay. So on a downtrend, we want to look for sells, right? Now, the hardest part about doing this is identifying when the action or the movement of price will be in a downward or an upward direction. But the general idea is that on a downtrend, we want to look for sells, and on an uptrend, we want to look for buys, because again, the next time the price hits a low, it's going to push up. Next time it hits a low, it's going to push up again. So that is how we apply the trend to our advantage. Now let's move on to zones. When it comes to zones, we got two types of zones. They're usually go by support zones and resistance zones. When it comes to support and resistance, again, it is a simple topic. You can think of support as a floor that whenever the price hits, every time the price hits the floor, it bounces back up, right? Now, what that also indicates is that the buying pressure is high. What that means is that once it hits our support level, price is likely to hit and come back up because there are more buyers in the market than sellers. A resistance works in the opposite way. You can think of it as a ceiling. Every time the price hits, it bounces back down, right? Now, what this means is that the selling pressure is high. And again, the sellers are more than the buyers. Hence, when the price hits our resistance zone, it is likely to drop back down. Now, the best way to visualize this is a simple bouncing ball analogy. Now, let's say we bounce the ball, right? And for some reason, gravity did not apply and it kept on bouncing, right? It hits the ceiling, comes down, hits the floor, goes back up, ceiling, floor, and so on. So that's the general idea. You can think of this ceiling, as we said, our resistance level, and this floor as our support level, right? And then we can think of the ball bouncing up and down as the movement of the price or the exchange rate over time. So when the price hits to the floor, it's going to go back up, hits to the ceiling, it's going to go back down. Now, what tends to happen is sometimes or quite often actually, our ceiling and floor actually breaks, or our resistance or support levels actually break. So let's say instead of a rubber ball, you had a metal ball and you threw that to the floor, it's going to actually break the floor, make a hole through it, and maybe go down. Or if you hit the ceiling, it's going to hit the ceiling, break through it, and go up, right? So that's the analogy I would apply when we think about the idea of support and resistance zones breaking. Now, what that means is that over here, we had some resistance, as you can see in the right-hand side diagram. You can think of these, the lines as the price movement. So we had a price movement, it hit our resistance zone, came back down, touched our support, hit back our resistance, touched our support. It was kind of stuck in this zone for a bit, in between our resistance and support zones, until it finally said that, okay, you know what, next time I'm gonna hit the ball so hard that it's gonna break the ceiling and it's gonna go through. And the same applies to the movement of price within the binary options market or the Forex market, is that if the price is, or if the buyers are pushing the price much higher than it should be at the resistance level, it's going to break the resistance level and is going to then look for a newer high or a higher high, which is something that we discussed all the way back here, right? In an uptrend, we have higher highs. So that's what's going to happen in this scenario, where the buyers are going to push the price, or there's going to be a lot of people buying that currency exchange rate, and it's going to push it past the resistance level and it's going to break it. Now, what often tends to happen, not always again, what often tends to happen is our old resistance level becomes our new support level. So previously we had the price bounce back off our resistance level, came down, bounced back off, came down, finally broke it. And now our new support level, which was previously this, our new support level will actually become the old resistance level. So now instead of hitting from the bottom and bouncing back down, it's actually going to hit from the top and bounce back up as our new support level. And somewhere at the higher side of things, it's going to form a new resistance level, where again, it's going to hit the level, break back down, touch our support, hit our resistance level, push back down, hit our support, and then eventually or potentially it can break our new resistance level to find a new support and resistance level somewhere higher up the chart. So that's the idea of support and resistance. Main thing to understand is resistance is pretty much the ceiling, support is the floor. Resistance, old support can potentially turn into new resistance, and old resistance can potentially turn into new support. If that makes sense so far, let me know in the chat. Drop a 1 in the chat if you guys are following. If you guys have any questions or if something is not clear, drop a 2 in the chat and we can have the question answered. Okay, looks like everyone is following so far, so that's good. Carlos 1, Dakota 1. Okay, perfect. So far we learned 2 concepts, right? We talked about trends and we talked about support and resistance. Now, how can we apply this to the binary options market? We'll take a look at that. So we'll head over to TradingView, which is the website where I do my analysis. Many of the traders use this website. It's free to use. You can simply go to tradingview.com and create a free account. But this is where you can do all your trading analysis, right? Now, we talked about currency exchange pairs. Can someone let me know in the chat, what is the currency exchange pair that we're looking at right now? So over here we have, on the top left, you can see this is a exchange pair, Euro CHF, right? So does anyone know what the CHF is? What country's currency is that? Let me know in the chat if you guys know. So EUR is obviously euro, so that applies to Europe. CHF, that's right, Switzerland. So yeah, so what we're looking at right now is we're looking at the exchange rate between the euro and the Swiss franc, which is denoted by CHF, right? And as we can see, we're looking at a 5-minute chart. What that means is every single one of these candles, right? Every single one of these candles represent 5 minutes of movement. Now, previously, when we looked at this example here, we said that, okay, we actually have a bunch of bars, right? But over here, we have something called candles, which actually look a little similar to bars, except they don't all start at the same position. Whereas bars, they all have the exact same starting position. And over time, we represent the change by the length of the bar. Now, when it comes to candles, it's a little different because any candle can start at any position pretty much. The only way to kind of follow this is that the blue candles actually represent a upward movement of price, right? So you can see, for example, in this candle right here, we can see it is a green candle or a blue candle, and the price actually moved in the upward direction. Now, this was followed by 2 more green candles, again, moving the price in the upward direction. And then we saw a red candle and we saw price actually move down, right? And what you often notice is that wherever a candle ends, wherever the previous candle ends, the exact same position the next candle begins. So for example, right here, we can see our blue candle, which indicated an upward price movement, ended right about here. And then our red candle, which indicated a downward movement, started at the exact same position where the blue candle ended and moved down to this position. And then we can see our next candle was also a downward candle, started at exactly the same position as the previous candle ended and then moved down. So that is the difference between a bar representation and a candlestick representation. The starting point of a candlestick is determinant on where the previous one ends, and the same applies as we move down the time as we see more of these bars or candles in this case pop up. Now, having said that, how can we apply trends, right, and support and resistance? First of all, we discussed that our trends are represented by either an uptrend or a downtrend. And when I look at this little bit of an area right here, where's my arrow? I can actually see that the price is moving in the downward direction. Right now, what that means is this was our first high, right? Our next high is kind of around here, right, which is lower than our previous high. Let's say our first low was probably here. Our next low is here. And then our previous high was here. And then our next high we can see is here. Our previous low was here, and then our next low is here. Now, this obviously isn't as, smoothly moving as we saw of the example right here, but we can conclude that based on the lower highs and the lower lows that we see, we can say that at least in this little area right here, we can say that it is actually in a downward trend, right? And what we said is on a downtrend, we want to look for sells, right? On a downtrend, we want to look for sells. So that is the first part that we talked about. We looked at the trend. We agreed that we're on a downtrend, hence we'll be looking for sells. Now, the other concept that we need to apply is the concept of support and resistance, right? Now, from what I see so far, I can see that there is a decent level of support and resistance at this white line that I've drawn here. I'm going to make it a little thicker. So we can see at this line, in the white line, we can see a decent level of support and resistance. Now, why is that? Again, we'll draw some lines to show that. Over here, we can see this is our resistance because our price is hitting the white line, coming back down. Over here, didn't quite hit the white line, but reached around that area and then dropped back down. Previously, what we saw is right around here, this was our support level. Now, remember what we said right around here. What often tends to happen is old support becomes new resistance, or old resistance becomes new support. Can someone let me know, based on what we see here, which one of these two have happened? Has the old support become the new resistance, or has the old resistance become the new support? So what we're looking at is these two areas right here. This area here and this area here. So let me know in the chat, based on what you guys have learned so far, what do you think has happened? So Mia says old support becomes new resistance. And Otilia says the opposite, I think. Okay, so obviously one of you is right. So what we see here is support always happens at the bottom level, right? Right here. Resistance happens at the top level, right here. So what we can see right around here, this is actually a decent support level because we can see the price actually hit a couple times at this white line, bounce back up, hit again, bounce back up, and finally broke. And then we said that our old support becomes our new resistance. Again, not always, but it tends to happen more often than not, especially when there's no news affecting the markets. So we saw that once the price broke, it retested our area, and it said that, okay, you know what? This used to be a support. I'm actually going to use it as a resistance now. I'm not going to break the price past this level, at least not just yet. So I'm going to hit this level, come back down, again, hit this level, come back down, right? So Mia and Michelle, you guys were right. Old support became new resistance. And what we've done so far is we've identified the trend, which is a downtrend. So let's write that down. So one, identified a downtrend, right? And then number two, we identified that old support has become new resistance. New resistance. So those are the two concepts that we have identified from this chart itself. Now, what we also agreed on is on a downtrend, we want to look for sells. So we'll just make a note of that. We are looking for sells. Right, so now let's say, for example, we took this back in time and we said that, hey, at 12:30 p.m., I'm looking at this chart. I've identified, first of all, a downtrend. Secondly, I've identified that my old support has actually tested my new resistance once. Now, again, this is not always going to happen, but what we can potentially predict is that the next time the price hits this level, it's going to bounce back down. And if we play this out, right, again, this is a few hours, 8 hours ago, we can see the price kind of hit this level and drop back down. Now, we've combined the two concepts that we've learned so far to potentially enter for a trade, right? Now, when are we going to enter for a trade? You can enter for a trade pretty much around this area where this line is. Now, you can see when it actually tested this area, it didn't quite hit the line. And that is important to remember because our support and resistance, they're not actually lines, right? There's not a single line that defines a support or resistance level. It's actually a zone. So this entire zone can be a support zone. This entire zone can be a resistance zone. So you can either look for where the candle ends, or you can look for where the candles kind of edge out on, right? So the body of the candle ends right here. And then these little spikes at the top and the bottom, they're known as wicks, right? So you can either enter exactly where the body ends, or you can actually go a little lower and enter where the wicks kind of hit the line. Now, if we actually took our entry on the wick, we would have actually got this entry. And if we went in for, let's say, a 3-minute sell, we would have won this trade. Now, again, just because you found an entry doesn't mean it's gonna do exactly what you want. Sometimes the price just about misses and goes down like it did in this case, or sometimes it just breaks through, right? Because if the buying pressure is high, it's actually going to break our resistance level and it's going to maybe look for a higher resistance level. So that is always a possibility. But for beginners, these two concepts are two of the most important concepts to grasp, because they really help you understand how the markets move. Now, I wouldn't say these two concepts are enough personally to enter for a trade, but once you kind of master these two topics, you can learn a couple more things that can help you find potential better entries, such as the Fibonacci tool, which we won't cover today, but we may in one of the later sessions. but yeah, this is a start, I'd say, for anyone who is looking to start trading within the binary options market. Try to understand the concepts of trend analysis and zones being the support and resistance zones, and just try to analyze the chart and draw these zones out, right? Look at the trend, see how these zones are being formed, if they are being formed at all, and then see how the price reacts off of those zones. And once you kind of understand that, then we can look at a bit more advanced techniques to potentially enter the market and then profit from the market as well. So that was pretty much everything I had to cover. Again, this was kind of, I wouldn't say completely basic, but anywhere between basic and intermediate level. For anyone that was new, hopefully that was clear enough for you guys to understand. But if you have any questions, feel free to drop them in the chat. Okay, so I have a question. How would you predict a future up / downtrend in this example? Now, that's a good question. Right now, we can see over here, there's not really any trend going on here, because we're simply seeing price kind of moving within a little zone. It's not really creating any higher highs, neither is it creating any lower lows. It's just kind of fluctuating in this area. So at this point of time, for the euro and the Swiss franc, it would be a little difficult to predict what trend is going to happen. But let's say if you were looking at this chart at 12 p.m. earlier today, you would clearly be able to see that, hey, this is quite evidently a downtrend, right? Now, what tends to happen is at 4, 5 p.m., the markets kind of shut down for a couple hours. Hence, this kind of movement happens, sideward movement or consolidation is what it's called. I personally don't trade when the price is consolidating. If you look at some of these other pairs, right, you can see a bit more consolidation, Maybe odd JPY is starting to break from consolidation and form a potential uptrend. But again, it really depends on what you're looking at and what the market is currently doing. I personally stay away from consolidation. I tend to look at these areas, right, where there's like an evident downward momentum for this area, again, which is an evident downward momentum, or this area, for example, where there is an evident upward momentum. So if you're looking at the live chart, it really depends on what's happening currently. Again, every single currency pair is going to be different, right? But around this time, the market tends to move slower. So it would be a little difficult to predict what kind of trend is about to happen at this specific moment. So that candle at 12:45 wouldn't be a strong sell trade idea because it didn't hit the resistance line. 12:45. So yeah, so in this case, it kind of missed. Again, depends on where you took the entry, right? And this would depend from trader to trader. Some people like to take entries at, like I said, at the wicks, in which you would have got an entry potentially, and you would have entered for a sell. But as of now, we could see it test this area again and come back down. But we already have seen it almost twice, right? So we've seen it hit once, come back down, hit again, almost hit again, come back down. So the third time, in my opinion, is a little risky. So if it does hit here, it can potentially break our resistance zone and maybe become support again, right? So it really depends on how you view the market. Again, some of this stuff is a little bit more advanced. but the whole idea today was to see how we can simply look at trends and zones and see how they react within those areas. Cool. Any more questions before we wrap this up? Everyone's clear. Drop a 1 in the chat if everyone's clear. Good. 1. Okay. Awesome. Perfect. Perfect. Cool. So the next session, we can possibly start looking at some of the more advanced tools that will allow us to actually find the right entry, apart from just these two concepts. But do make sure to practice this, right? You can just open up a chart on TradingView. Once you create an account, try to identify the trend, try to find these zones, try to look for resistance and support, and see how the price reacts off of those zones. But yeah, having said that, thank you guys for joining in, and we'll catch you guys next time. Peace.